How's it going, everyone? Welcome to the weekly trade review for the week of 5/12 to 5/16. Took 7-day trades this week, 3 swings, and I have 3 open positions. And I mentioned for the swings, didn't all take them this week, but 3 swings that I closed this week. So quite a bit of trading activity. End of the week down. First red week in 6 weeks, negative $300 in profits. So we're going to get to that in a little bit of a second here. But let's start with just what the market had done this week. We're going to get into the swings. I'll talk about some of the open positions that I have, and then we'll get into the day trades. Okay, so on a D1 basis, I'm obviously recording this on a later week, but we had a pretty bullish week this week. So we had some Trump news that they had signed a deal. They signed a deal with China, and they're negotiating the tariffs. So there's a 90-day pause on that 145% tariffs. That's now going to be at 30%. So that pause is going to end in August. I believe August 14th, although I'll have to check my notes on that. So we had a positive rally from this news, and this is a pretty big jump in the market, right? We had closed from 564, and we opened right over here at 581. So $15 move in SPY. Gap up above those SMAs, gap up above this pivot high over here. And we had a bullish day, so we're able to add a little bit to those gains after a early or a bid check in the first half of the day. And then we could see we kind of rallied the rest of the day. So we rallied up here a little bit of a pause, rallied up here. So market was just kind of steadily grinding up and adding the gains. So bullish week. And I think, a lot of people did take some heat and they closed out some shorts on those losses. I'm thinking I'm going to make a separate video about that, trading on tilt and dealing with losses. But for right now, to me, the market trend was up. I didn't get aggressively short over here. I had one swing short on a half size that I closed for a loss on this move up. But the short-term market trend is up, right? We're in this bullish channel. So until we get, to me, a break of this bullish channel and get back down through that 200-day SMA, until we see that, I can't get very confidently bearish over here. So that's what I'm seeing in the market. Let's go over some of these swings, and I'm just going to pull them up on my end over here. All right. So first swing, AFRM. So I took a firm over here, post earnings bear on the 9th. So here's the setup. Here's SPY on the 9th. And here's AFRM on the 9th. So the setup for this stock was that the market was flat. And it was below major resistance right over here, which I was leaning on. I like this breakdown. It was a very, very bearish stock. Heavy selling post earn, and it poked right into the gap. It didn't quite, it kind of pulled back over here. Didn't quite clear it very strongly, but did poke over here. So I took the, if I have it right here, I believe the 46.5, 44.5 PDS expiring next week for an 87-cent credit. So I took 2 contracts, which was just a half size for me. Because we didn't have the market confirmation, but I like this setup in the stock. I thought it was a pretty weak stock, and I thought it had a lot of its own gravity given its post-earning weakness. I also liked how the stock was getting through both of its SMAs in one day, and it got actually closed below all its SMAs while the market was kind of between both of its SMAs. So like that a lot. Now, the next day, ended up taking a loss on the stock because I was quite an idiot over here. And I had an order, a good to cancel order out at a debit versus a good to cancel order out for a credit. So I ended up taking basically a max loss on the open over here. Now, it would have been a max loss anyways if you go all the way to the 16th. Didn't really improve, so it was holding up pretty well, but then managed to rally back over here and then come back down. Now, as I'm recording this later in the week, this stock has actually come back down quite a bit. So if I actually had a longer term position here, I could have scratched out of the trade. But just a tricky thing with CDSs, in my opinion, is that if you get the market timing wrong, you're pretty much just eating it up instantly. Versus that if you had a longer position, like just deep in the money call, or I guess in this case deep in the money put, or some shares that you had sized up for a move over here, you could kind of take some heat and then ride it back down without this getting totally destroyed. I don't have just when I have a move of this magnitude, it's like it could still get retraced because I'm trusting in this longer term selling, but it's just going to run out of. It's probably going to retrace and come back down to earth before, after my PDS expires. So that's what ended up costing me in a firm. So took the loss on that. That was one contribution this week that poked me down a little bit. The second trade that I took was Uber long, and I took this on the 12th. So here was the setup on Uber. Stock, first of all, was quite strong. Just generally speaking, with regards to the market rally, was able to clear this relative high pretty easily. And I believe this was an all-time high on Uber. I might be wrong on that. I got to check. It might be a relative high, but as far as I can tell, we cleared this high. I guess I can check right now. Okay, there we go. All-time high on Uber. It's a quick way to check on the monthly chart. So broke out over here on the 12th, and I like this because its stock wasn't super extended on the market pop up over here. You can see that, and it's always good to go back and see the setup of this breakout over here, kind of breaking out of this compression, come back, check some of these levels, and then we're getting through this compression high as well as the all-time high, and we had a nice close above it over here. So that's where I took Uber. If I look at the M5 chart on the stock, we can zoom in a little bit. All the way back to the, here we go, to the 12th. Okay. Yep, so we had a nice close above it, and I took Uber long. I took 40 shares at 88.26. So, yeah, got in pretty much around the close over here. Uber then had a pretty nice rally the next day, and I ended up exiting at around 90.57 pretty early in the day. So I think I exited into strength on this long red candle for a nice gain, $2.20 gain per share over here. And market was advancing higher on this gap up, so I figured that, this is probably going to come back and test support at some point, so I'm just keeping my swing trades relatively short term. And Uber had a pretty nice gain. I knew there wasn't that much upside because I was targeting a $2 to $3 move in the stock, so I got a pretty nice move, and then I took gains when I got it. So that offset some of the damages there in AFRM. And if you look at the D1 chart over here on Uber, I think I had a high plus trend line coming into play over here. So we kind of have this one, which is a fairly new one. But if I were to draw one kind of like from here to here, right, you can see how that trend line was pretty much a target for me, which came around 91, maybe call it $92. It was rubbing up against. So when I took gains, I took it as it was approaching this high plus trend line into some strength. So ended up being a pretty nice win. The next trade I took over here, or the next trade I closed actually, was my ABBV call credit spread. So I took the spread on the 7th over here. I think Dave had called it out. So where was the 7th? Yeah, right over here. Took the spread. Here was the setup. And I took the 197.50 200 call credit spread for a 60-cent gain or 60-cent credit. I'm just trying to find this in my notes. Here we go. So what I liked is that ABV was stalling at the high of the day while the SPY was kind of rallying here. The market was flat, and I was neutrally bearish here. So I figured if I was going to take any sort of swing short, I wanted some cushion and I wanted some distance from the price action where even if the market didn't really move too much or if ABVV was chopping around, I could still get a nice win on it. So, I was like, look, SPY could break up, SPY could stall, SPY could come back down. I thought it was more likely that the market stalls and breaks down versus the market goes up. But even if the market does go up, I knew I had some cushion because I had all these SMAs that I could lean on, as well as the open of this long red candle, as well as this downward sloping trend line, as well as a nice little bearish trend on a shorter term basis. So that was the setup on ABBV. Kind of went crazy here. Even on the 12th, it actually gapped down a lot and then rallied really strongly. So I was like, okay, at May 12th, I was like, let me just see what it does here. Let's see if this green candle holds. The gap down was interesting because the market gapped up strongly, but it's still holding. It broke through and came back and poked up with these SMAs and closed right on it. So I couldn't really tell. Next day, we fell down below. We preserved it. Tested this red line is the election AVWAP. So we tested that. And then the next day, we got a really big sell-off on the 14th. And I believe, here's the 14th. So you can see that a lot of it, this was market-related, and pretty much as soon as the market stalled here and ABBV had digested some of these gains, it actually slapped down lower. And I ended up exiting this stock, if I put it correctly. Right around this low plus trend line that was coming into play just around 180. Right, so there's a low plus trend line here. There was some horizontal support at 180 from this low post earnings. This low from this candle also confirmed that level. We also have this became resistance, then that also became support. So a lot of touches around this level. 180 was pretty critical level. And I figured like, all right, at May 14th, market is preserving the gains. ABBV is looking weak, but if I can get out for like 10 cents or something, I'm going to get out for 10 cents. So I exited for a 10-cent debit, so 50% profit on that spread. So closed the entire thing for close to an 83% profit, which is really, really nice. So just took it into strength, and I figured that I could hold it, but, there's a risk that it pops up higher. I also didn't love this green candle. I like that it got smacked down, but I figured my initial market bias was that we would preserve this, right? So as long as we preserve this, then I was good. But the fact that we didn't preserve it, I was a little more bullish on the market. I needed to see what was going to happen. I figured if I can close this call credit spread, which is a neutral to mildly bearish position for pretty full profits, I'm going to take it. All right. So that was ABBV. I'm going to talk about the open swings now because that goes into my final quote-unquote closed position, which I didn't count. And that was Rocket Lab. So I took Rocket Lab here on the 14th as the market was marching up. And here was the setup. You can see I've drawn this bullish channel on Rocket Lab, but I really like the setup. So if you look at this chart here, massive run up on this stock, right? It's compressed. And what I've noticed on these run ups, this is anecdotal, is that they often need a pullback to that 200 SMA. And they find some support, and then that's usually the beginning of that rally. You can see it even in stocks like SMMT or ASTS, something like that. ASTS might not be the best example, but you'll see how maybe I'll bring it up here. They'll go on a massive run, and right here's that pullback, and then that bounce off that 200-day moving average. That gets a nice meaty chunk of those gains. So ASTS still waiting for the stock to break out of that trend line ever since August. It's got to take a long time to digest that move. But anyways, let's go back to Rocket Lab. I hope that's actually what it's... Pretty sure that's what it's called, right? Yeah. Seems like that's what it would be called. So this stock was a nice breakout through this compression. Above the SMAs, downward sloping trend line breached to the upside over here. Nice candle on very good volume. So came over here, and I think I took it near the breakout or when the stock was around $24. So if I look at my chart here, took it around noon, and I went long the 6. And by the way, on ABBV, that was the 523 call credit spread, so it would have expired tomorrow as of recording this video. For Rocket Lab, I took the June 20th $20 calls for $4.95. So I was paying about 95 cents of premium on that. So well in time, deeply in the money. $20 calls are very liquid, a nice round number. So really like that position, and it was a good size for me as well. Now, the setup here is that SPY breakout and held up the 100 SMA. It could retest. So my plan with Rocket Lab was like, look, if it retests, I'm still okay with holding this position, which is why I went so far out in time. I went about 5 weeks out in time here. If it retests, I'm still good with holding that position, giving myself time. If the market completely tanks after that, then take the loss. But this stock has been pretty resilient. I mean, just look at how it responded during this big market bloodbath over here. Lot of relative strength and preserved that 200 SMA very, very nicely. So there are some buyers, a lot of buyers here at $16. And over here on the downside, around the $20 level, you got a lot of horizontal support. You got this little gap over here. You got the 50 SMA as well. So a couple things in my favor. And I got the 100 SMA to lean on. So now, because I knew that this could also go against me, I actually sold the weekly call, the 25.50 weekly call, for a 21-cent credit. So the 516, 25.50 calls for a 21-cent credit. I sold that on the 14th with 2 days to go. It could get there, but I figured that, look, the market might pull back. It might stall out, so I can kind of get a little bit of extra profit on the trade. And so that was the position I closed out on Friday, was this short call. So it rallied over here on the 16th, closed right at 25, 22, something like that. Next day, it rallied a little bit, and I think it closed, right above it, but it was kind of a choppy day. It pulled back a little bit. You can see it rubbing up against this upward sloping trend line. So pulled back, and it, when on the pullback here, I took profits on those 25.50 calls, 50% profits, so got out for about like a 11-cent debit, or like a 12-cent debit, something like that. So that was the last little swing trade that I closed. Okay, so with that out of the way, let's look at some of the day trades that I took today, or took this week. So I had 7 day trades this week, 3 wins, 3 losses, and 1 scratch. So we're going to start on Monday. And Monday, I took Meta long. So let's look at this on the 12th. And I'm going to go back in time a little bit here and also go back in time on SPY. Okay, so let's look at the setup on the 12th, right? So market has this gap up, and I'm going to try not to make it super big. Kind of hard to see. Okay, I'm going to start with the gap up, and we're going to zoom in. So we have this gap up here. Maybe I'll zoom in out over here. Gap up. Market is testing the bid, testing the bid, testing the bid, testing the bid, but is unable to actually test the 200 SMA. So when I see this downward sloping trend line breach to the downside, and then we start to get above VWAP over here around 1220, right? 1225, 1230. I knew that we had a nice little window to take some day trade longs. So I'm looking at Meta here, and I got to go back way more in Meta. This is a stock I also genuinely enjoy day trading as well. So Meta, you can see how as the market declined, this stock had also gapped up, a little bid check, and then it was just testing this high over here. So I love this setup. And then on this break here at 12:45, that's when I took the candle. Now, it was a little bit relatively weak, which I usually do not like in a setup. I prefer this breakout, right? This breakout happening at like the 12:15 candle. So before the market breaks out, this stock is ready to go, right? I want to see it here breaking out versus the market's rallying and then the stock eventually breaks out. But I took Meta, and I took 45 shares at 656.41. So, or sorry, it should be 636. Oh, that's the wrong Meta. Whoops. Here we go. 635 day trade long 30 shares, 635.38. 635.88. So took it right around here. And then really what I was looking for here was my stop was at VWAP, which was $10 lower. You know, if I can get a nice $2 to $3 gain on the stock, then I will take it. So compressed for a little bit and then popped up higher over here, and that's where I took gains at 105. I exited the trade at 638.38 for a $2.50 gain on the stock. And pretty good time to enter. Now, the other reason I was quick was, one, I knew that this wasn't a big window. And two, this window is already kind of starting to move, right? It's already kind of starting to move here. And we got this nice pop up at 105. Yeah, 105. And I figured that, all right, I mean, this looks like kind of climaxy. We've had a nice move. Probably a good time to take gains into strength and not look back and just take that win for today. So that's what I did in Meta, and was a nice win on the books. Now, the next trade I took was also on the 13th, and I also went long Meta again, but this time it was a different trade. So I took it over here. So let's look at this on the 13th. So I went long Meta at the 1055 candle. So right over here is where I went long Meta. SPY had a nice move up, and it was starting to pull back, and we started to see some support form over here. So I like this setup, and then during this pullback, I was looking for some strong stocks. Still had Meta on my radar, and you can see how this stock was holding up really, really well at this point. So I took it at, I believe, 1055. So when it started to break out of this little compression here, right? Here was the setup. Close of this 1050 candle right over here. So this is what I saw in the stock. The stock is just kind of grinding up and coming off that 8 EMA, looking nice, and it's not too extended from VWAP. It's a nice little 45-degree climber here. So market kind of just rallies up a little bit here, which is nice. And on Meta, I'm just kind of waiting to see if I can take some gains into some strength over here. And I believe I do take gains on this stock. I exit this position. So I entered at 656.41, and I exit the position 658.71 right over here on this long green candle, where I just hit that target because I knew, like, look, we made a nice move today. I don't know how much it's going to last or not, but, you know, Meta's a nice stock. I can take my gains and then get back to the sidelines. Now, it still had a little bit more of push into it, but I'm not going to milk out every move. When I see a nice long green candle on this kind of grindy pattern, that's a nice time to take gains because you can see that these long candles get a little bit retraced each time. So, again, nice little base hit on that stock, and took another win on that. So with those trades, I think I was fairly break even for the week on so far, with the swings and the days all sort of mixed in together. All right, so next trade I took on today, same day, was Oracle long. So let's look at this daily chart first. All right, so I took Oracle long on the 13th, same day, and I took it at 1240. So here's the D1 setup. It was breaking above the 200-day moving average, and again, this red line is the election AVWAP. I just kept it on my charts, and you can see that, you know, there is still some reaction over here on that day. So that was a setup on Oracle here. Nice D1 chart breaking through a technical level. All right, let's just going to go back to the 13th. Okay, so I took Oracle at the close of this candle here at 1240. So this was the setup. Really liked Oracle on the M5 chart. Compressed, broke through the 200, compressed again, broke back above at 1235. And if I look at the market here, you can see that I took it, yeah, pretty much right as the 1235 candle. Yep, so I took it right over here as the market was starting to move up higher, and we had this nice bullish cross at the high of the day. Now, this was a marginal new high, but we didn't get knocked back too far, so I figured we still have a nice chance to get in on this trade. And Oracle had a beautiful head of relative strength. It was compressing during this move lower, and then it had broken up above here with this move higher. So, nice little bit of follow through, and we got this bearish engulf over here. This little bearish hammer at 1245. SPY was looking still fine, but I was like, all right, look, it's going to pull back here. If this gets quickly gobbled up, I'm good. And then it did not get quickly gobbled up over here on 1250. So I was watching it here. I knew it was going to test this level. And then it had this nice, this is a really key candle for me. And I can't exactly, I feel like it's hard to explain why I exited it, but it hit this horizontal resistance right here. Nice green bar. And I was like, all right, perfect, right? Green bar, eclipsing all of this bar. As long as this level, breakout level holds, I'm good on this trade. Moved up higher, and then it kind of compressed. And, or sorry, it didn't compress. Moved up higher, then it got smacked down to form this hammer. So to me, that was a pretty key tell. The market is starting to roll over here. It's not able to break above this high. And this stock had some selling off here and could not eclipse it. So I took the small loss here. I closed it at 160. I entered at 100 shares at 160. What's this? 162.92, and I exited at 162.53. So it took about a 39-cent loss on this. So pretty tiny loss on Oracle. But it worked out. Ended up working out pretty well. This stock had to pull back. And I knew also that this could probably pull back to the 200 SMA. So I had to pull back all the way over here, test this level. You can see SPY is kind of inching up, surging up higher here, just now actually kind of grinding up. So this stock needed to pull back, test this level. And then once it started to find support, that's when you could start to get long, probably on this candle here, and had a nice move. So I think overall it was a good setup, but the improvement that I would make on this is that on these breaks of the SMA, you want to wait for the retest. I like sometimes these continue on longer, and I like on a straight M5 chart perspective, I think I had a really nice entry on this. I mean, the two issues I see was one, it needed to pull back to the 200 SMA, and I got out at a good time, so I was really happy with my exit. The second thing is that typically I'd like to see the surge and then enter it on the first pullback. If there's already compression, then another break. The stock has already traveled pretty far in two big moves. It's going to be harder for it to continue up onwards. It's probably going to need a much bigger pullback that you can get in on. So, pullback and retest of 200 SMA, and it's the second pullback of the day. So I'd rather get in on this first pullback maybe here, but I usually don't take it on the SMA break. That's more of like a Pete move here. He'll take it on this as it's breaking above here on this rip up. I would prefer the rip up and then the test coming back on it. All right, so small loss here. Next trade I took on the 14th was Globe, GLBE, and let's get this chart here. So this was the setup. It was a what I call this bullish gap reversal trade. Again, not a textbook setup, but it's one that I actually found that I like quite a bit, a little more of an advanced setup. So had this reaction post earnings that again got smacked down. So let's see kind of what happened here. And what the clue that I saw here was this actually, as I traded this, it got hit by this high of this candle that was providing some resistance. And also you can see there's some resistance coming in at 36.85. That was a factor in the trade going south for me. So, looking at GLBE here. All right, so it had the nice pattern that I liked, which was we got gap down, nice bullish candle test. We're just kind of grinding up higher on the 14th. And you can see the 14th, very choppy day, right? So I see the stock grinding up higher, and then I see the market pulling back. So when the market starts to find support, I am long on Globe. I enter at the 1135 candle, which is this candle right here. So I enter right here around 3682, and I take it off the break of this low minus trend line break on the M5 here. It still hasn't quite cleared the high of the day, but I find these low minus trend line breaks to be pretty reliable. Also cleared this little high here, and so on. So I see that at see these horizontal lines coming into play here, and the stock pokes up a little bit and then gets slapped down over here at 1140, and just starting to pull back to VWAP. So at this point, I'm not crazy worried, and I also know that I feel like I timed it pretty well here. Here is the market at, well, I guess 1130. So market's rebounded back above VWAP. I feel confident that buyers are in control here. We might have a chance to rally up and test the high of the day. Market starts to stall out over here, and this stock actually starts to pull back on the stall. Now we hit VWAP over here, and I'm sized for $2, a $2 move below VWAP. So I'm taking it here. I'm sized it for like a 34.89, like somewhere here, right, where like a clear break of VWAP. So I'm long at that point, 150 shares of the stock. We get that break below VWAP. I'm not panicking, and we get a nice bullish hammer. So I'm like, all right, look, we broke below VWAP. It's not great, but this could be the poke, and then we might surge higher, like at least scratch out or get a much better loss on this position. So we poke back above a little higher. We get another little retest, which is fine, and then we're not really getting any liftoff at 130. And if you see, here's the market, right, 120, starting to rally. So it's holding up really well during this rally, but it's not able to lift off. And then we start to leak lower. And during that leak, I was like, all right, look, this double bottom is fine, but we needed to rally off this double bottom. We need to get off the deck quickly. There's a lot of many consecutive candles, lots of red selling pressure. I got to get out of the trade. So took the loss on this candle at 140. I exited it at 35.05, which was just shy of a max loss on Globe. So, I mean, it was a good setup that I liked. I think the one issue I had on this stock was deciding that whether I should actually wait for this high of the day break or not. I also size it typically for a move to the prior day VWAP. So if I just drop that here, that's usually my target. So you can see that I had some room to this level, and that also coincided with that major level on Globe. Now, I'm glad I took the loss and I didn't get stubborn and try to hold this, because that's when you can lose a lot of money, and you can see how the stock has plummeted since then. So I would be in quite a world of hurt had I held for super long. So stuck to my entry and my exit, took the max loss, and then, wasn't really looking back after that. So I'm looking just at the level that it kind of reacted to. Two things I'm wondering here is like, all right, kind of hit this level here, right? So, maybe I should have kind of given more credence to this long green candle over here. I liked how it also had broken through the 50-day moving average, so I felt that offered some support on the stock. So I think it was a pretty decent trade. Maybe one or two things that I could have not taken it on, but I felt like I synced it well with the market. I got a good entry. I played to my, kind of just took the setup as it came. So I'm not really too bothered. That's just kind of some minor nitpicking details here. All right. Second trade I took that day was Roblox. So I took Roblox. Here is the trade on the 14th. So it was a nice breakout here on the 13th. Some nice continuation above this high plus trend line on the 14th. So let's look at, that's the D1 setup. Let's look at this on an M5 basis. Okay, so this is Roblox on the M5, and I took it right at here on 150, at 150. So pretty choppy stock, but I liked how it had held this green candle and just was grinding up for most of the day. Wasn't super extended. I think maybe, I guess, a better entry would have been at VWAP, but it was hitting a lot of resistance over here at this high plus trend line. So I wanted to see that high of the day get cleared before I was ready to get into that trade. Now, if I look at where I took it, right here, 150. If I look at the market here, at 150, it was finding support, starting to grind up, and you can see how this stock was rallying up with the market and did not really get knocked back down when the market sold off over here. Stayed pretty flat. So took it right here. I took on Roblox. Where is this? Took 300 shares at 79.18. So I got to fill below this candle. It's a choppy stock, so I figured I didn't have to test the high of the day. I could probably get in right over here. So I took it, and you can see how stock kind of compressed, didn't really do a whole lot. And so when I got this kind of candle over here, I ended up scratching out of the trade on this bearish engulf because didn't really go anywhere. Market was rallying, stock was kind of losing pace, and didn't really want it to get ahead of me this late in the day. So waited for that, kind of chopped around, and then had a nice move. Worked out a lot better as a swing, in my opinion, in this case. So Roblox was a scratch. Last two trades I took, first was Baba. So I took Baba post-earnings break. It had broken right down through this earnings, this gap right over here. So I really like that. And took it right over here on the 15th. So let's look at SPY on the 15th. All right, so SPY on the 15th. Market was rallying and then hit some resistance and started to stall out. So I was waiting for this rally to get over. I missed my entry here, so I was watching to see if we could get something on the downside. Now, if I look at Baba, okay, where is my chart? Okay, here we go. All right, so Baba, you can see that this stock is unable to get off the deck today. Heavy selling, rejecting off the 50 SMA here, and it had poked through and closed below the low of the day right here at 255. So I took it on this low day trade short, 150 shares at 122.75. My bad. Here's it at 250. Here is the market at 250. So it held really well during that rally. So I like this sync, and I know the market was up on this day, but I actually got the market right, and I picked a really strong stock, Chinese stock with lots of heavy volume. So I felt that I was comfortable taking this short today. Now, on that move, Baba rallied higher and did not look back. Typically on these trades, they might poke in here and they get smacked down pretty quickly. So I knew already that this was a warning sign, and I was in the defensive mode. It should have produced, especially when the market was moving in my favor. So I was waiting for this trade, and then it popped down over here, which is what I wanted to see, but then it kind of got gobbled back up. So I ended up taking the loss at 355 at 123.92. I think at this candle right here. Yeah, took it right over here because my stop was somewhere kind of above VWAP, and the trade didn't pan out. So that's what happened with Baba. Unfortunate, but I like it. It wasn't the worst trade, and when I look at my whole body of work, I'll determine that, whether I think this is a good trade or not. But that was my decision making in hindsight, and seems pretty solid on face value. All right, so last trade, Friday mentality. Now, I was down in the week. I'd taken losses on Globe and on Baba, so wasn't really a fan. I was really telling myself, I was like, all right, look, took some losses. I thought I played it well. I'm not going to let this turn into me just vomiting all the gains that I've got, right? Big mental challenge for me. So look at Docs here. Docs, another gap fill reversal. Same situation where I would have lost money, or I lost money on Globe. But I was like, look, I liked what I saw here. This is a good setup, and I'm going to trust it and just take it again when I see it. So let's go back to Globe here. Now, Globe, Docs. This is, first of all, you can see the price action is a lot stronger on Docs. There's one entry over here, breaking through this downward sloping trend line, right? Testing the high of the day. In this case, very similar setup to Globe, but this one produced, right? And it got through the 200-day moving average, which was actually a little bit lower here at this juncture. So I took Docs long, 120 shares at 51.90 at this 105 candle. Now, if I look at SPY over here, right, here's SPY at the 105 candle. SPY was compressing and popped up over here. Docs held up pretty well and was marching up higher. And my target was right over here, which was 52.40, which was the prior day AVWAP. So that prior day AVWAP came in right around here. Maybe 52.47 was when it came in. So my target was like take the nice move to the prior day AVWAP and then get out of the trade. So that's what I did. Got in, got out, took 50 cents on the stock, exited at 123, and that was a nice win for the day, right? Market was just marching up higher, and it took my win. So made the loss for the week a little bit better, and that was a nice little mental win for me. So those are all the trades I took. I am long a couple of trades here. First trade, I am long Rocket Lab, which I'm going to be holding those calls into this week. Second trade that I am still long in is my Love PCS. So that on the 16th is up, and that's still doing well. So long that Love PCS. And then the last one that I am long in was Netflix. I took Netflix long on 5.15 on this breakout to a new all-time high. So long 3 stocks as of the 16th. You'll get the final update for those stocks, which I made some closes this week in next week's video. But I took it long there, and wasn't going to take any more longs until I saw a market dip. So that was the plan. So that was it for this week. Mixed week. I mean, I took my first loss, but I feel pretty good about making it back this following week that I'm not currently recording in, and not letting it spiral, right? Just bouncing back after the L. You know, part of it was at a couple of 1 or 2 day trades that didn't go my way. I had a swing that didn't go my way. I made some of it back, but I didn't quite make all of it back. But my open swings that I'm in are offsetting the losses that I took this week. So that's how I see it. All right. Thanks for watching, everyone. And I will see you guys in the video next week.